Welcome to the Stocks with Josh show. As you can see, today Uncle Larry here, Stock Up with Larry Jones, is hosting this show for me. Go ahead and hit the like. Thank you for hitting the like, the subscribe, and the all notifications YouTube bell. Anything I say is not a suggestion for you to buy, sell, or hold. We're going to have a very interesting conversation today. We're going to be talking about these extremely confusing markets that seem like they aren't doing exactly what they should be doing or what anybody would predict. The analysts are confused. Today I'm going to answer some questions. We're going to go through this week, day by day, and then I'm going to make some predictions of what I think has to happen moving forward. You have anything to say, Larry?
Good afternoon after this roller coaster ride.
All right. Well, yeah, it's been surprising. Let's just start off with Wednesday. The bottom line is that the Fed comes out. He really says inflation is not tamed and that there are going to be additional hikes and that they're not going to be lowering the interest rates anytime soon. And the market loved it. And it rallied. It said, we don't believe you. You're bluffing. We're going to go up from here because the worst is behind us. Inflation is last year's story. Then Thursday rolls around, Larry.
Yep.
And we get earnings. Now, I'll be honest with you. I had done my research on Apple, and I had already read numerous reports suggesting that they were having poor performance in the last quarter, but it was surprising that they had an 8% year-over-year decline in phone sales. That was shocking.
I brought that up actually in my video.
Did you?
Yep.
Well, let me just pause right there, Larry. What are your thoughts on that?
Well, we were prepared for it yesterday before earnings. Today is Friday, so it would be Wednesday before earnings. I was expecting low sales. I brought up the fear because of China, the shutdown, and I just had a feeling that they were going to be beneath their phone sales. And then you have, of course, their advertising dollars, right? And so that's why out of all of the earnings, it's the one that I did not buy. You saw my portfolio. Yeah. It's the one that I did not do a call option or did not buy. And as you know, I shaved some of my Apple earnings. I'm sorry, my Apple stock. I just did a little shaving, a little profit taking on some Apple stock that I've had for a long time. And I just felt like it was just, they weren't going to hit the mark.
Yeah, well, it's not a bad time to be shaving Apple because Apple has come up quite a bit from its lows.
It has.
My preferred vehicle, Larry, was Tesla because of the way it was running. I did a comparison on the way it was running.
Tesla.
I did a comparison on my last video pointing out that even though Apple's had a great run, it's come up 22% from its bottom.
Right.
And Tesla has come up near 100% from its bottom. You can't ignore that speed and that performance.
If you try to compare Apple and Tesla, it's just not a comparison.
I know, they're two different animals.
Tesla is not a stock. It's not of this world. Tesla, I bow down to the altar of Tesla. Tesla defies gravity.
Well, I was amazed when he came out and said that he had ongoing multi-year forecast of 50% increase. Wow. And I'll just say this.
Even now.
Because, Larry, I pointed out in my last tech video that was actually something that Snap had said back in 2021. They said that they were going to enjoy 50% year-over-year increases for years to come.
Yeah.
But then the very next year that didn't happen.
Yep.
And Snap is one of the horror stories. It snapped over there at Snap. It's one of the Nasdaq horror stories.
Yep.
I am still bullish on Tesla.
Me too.
I believe that Tesla will come back. My particular buy price for Tesla is, I told you guys, I'm looking at 120. There, people say it's not going to get there. We'll see.
Be careful. Be careful. Be careful about price predictions. Let me warn you.
Tesla is at the top of the range. Yeah. Twice before, we've seen rejection at 195. Today, we've blown up to it, but we've got to see how this week plays out, or how we got to see how these candles play out moving forward. But let's get back to the narrative of earnings.
Yeah.
Okay. Apple missed 8% phone sales. Then we had Google that owns YouTube.
Yep.
They saw an 8% decline in ad revenue.
Yep.
Again, another massive miss.
Right.
And the market loved it. They're like, give me some Apple and some Google,
Yep.
throw in some Tesla, and
Yep.
we are running.
Running
And
up.
What are your thoughts on that, Larry?
Well, I did an option play, and I did buy the rumor, sell the news, as you know. I bought some 4 days ago, made some massive gains, and got out.
Yep.
Because I did not want to wait until earnings. Because right now, remember years ago, like 3 months ago, years ago,
Yeah.
when
when we were in a bear market?
we were in a bear market years ago. Remember when good news was bad news and bad
Yes.
news was good news?
Yes.
Now, today,
All news is good
yeah,
news.
all news is good news.
All news is
is
good
good
news.
news. Bad news is good news, and good news is good news.
Yeah.
And the market is just like confused.
It is confused. I think that's the word for the day. I actually that would be the word, Larry, that I would use to describe this entire week. It has actually been very confusing.
I dare one person this entire weekend and say this is exactly why. And many will, and there'll be different reasons. And the fact is, no one knows exactly why today went
but
the
I'm
way
going
it
to do
went.
two things. By the
Yes.
end of this video, I'm going to give you guys my reason for why this has happened, and then I'm going to give you guys what I think the market's going to do next, where exactly I think it's going to go. I'm going to just jump briefly into the charts, and in my view,
Let's do it.
but before I do that, I'm just going to cover the last big event, a news event that we had this week, and the way the market responded to it. Now, this one really threw the market. It threw me for a loop. Okay, we get the jobs report this morning, Larry.
Yep.
Okay, now we're expecting 200,000, under 200,000 new jobs in the month of January.
For those of you that are new, just remember, good job news, meaning low unemployment, was supposed to be bad for the stock market. So,
Yes. Well,
but
yes.
did I say that right?
Well, yeah, you said that. Okay, so basically,
Say it.
if we have a very, very high jobs number, that
Exactly.
means that the Fed's going to remain hawkish longer.
Exactly.
And so it's bad news for us, the
Right.
people that have to work for a living,
Yes.
right? But it would be good news for equities.
Exactly.
Okay, because it means that he would have the right. He would lighten up on his hawkishness.
Right. So if the job numbers were really bad, meaning high unemployment, then it was supposed to be good for the stock
Yeah.
market because the Fed would be less hawkish.
Yes. Well, here's where it went.
Yep.
Basically, this economy added 520,000 jobs approximately in the month of January. That was an incredible rise in employment, right? People were getting hired, which means that all these big tech companies that are telling us that they're laying off 18,000 here, 10,000 here, 5% here, 8% there, I'm not sure if they're laying anybody off
It was
because
the best over 40 years, Josh.
it was an incredible number,
Yeah.
okay? And now this should mean this would be bad for the market.
Yeah.
Bad for the market. And yet the market still ran after that jobs report came out.
Yes.
Okay, so obviously there's a lot of confusion, and there's that old saying that comes in mind: if you had puts going into any one of these days this week, that would have been a sensible decision. If you had inverse ETFs going into Wednesday, Thursday, or Friday at the height that the market has hit, all the way up to this 4,200 and 420 on the SPY, that would have been a sensible decision. But the market can remain illogical longer than you can remain solvent.
Say that one more time.
The market can remain irrational
Yep.
far longer than you can hold on to your cash.
Yep.
Especially if you're in option plays or if you're leveraged.
Yes.
Wow. So that's where we've gone. I'm going to take a quick station break just to talk about the Moomoo investment app and the Webull app. Both of them are in the description of this video. There's a link pinned. They're giving you free stock. I particularly like Moomoo because they've got the free level 2 data, they've got your stock screener, and they've got your smart order types, as well as the Stock Josh Fam chat group, which I think is on fire. Salute to the soldiers of the
Best chat group out there.
Thank you. And so check out that link.
See how I gave you the bed music, man? Because
You did.
you
It
do
was
it
good.
on your
It was good.
videos. You got music.
That's true. That's
going.
true.
I was
People
like,
are going to be missing that music today. Okay. So yeah, I'm just going to say that, Larry, I'm going to ask you your opinion. I'm going to throw out this thought. I think that this is a unique situation that we're in, okay? Because the market was due. We had some pullbacks. We had no major pullback in the last decade. The market's been on a bull run since the heavier Great Recession of 2008, 2009. Yes, we've had some 20% pullbacks, but this market's been going higher and higher and higher, right?
Yes.
And then all of a sudden, this black swan event, COVID, came about, and we forced the economy into a recession because we shut down all production, all work, and then, of course, the money printing machine fired up, and the politicians, people were hurting. They're sitting at home wondering what's going on.
Yeah.
They spent more money in the last 2 years. There was more money created than there had been in the last 100 years.
Yes.
Okay, so it was just an unprecedented thing. So here's what's going on: the market, we're dealing with inflation, right? It's not solved. In my personal view, it is not behind us. I actually agree with the Fed that we have inflation that's going to come back and rise. That's ahead of us. I don't believe we're going to get a Goldilocks landing. And just for those who may not know what the Goldilocks environment is, it's Wall Street uses that term all the time to confuse retail people. It's basically this idea.
It's the truth.
All these
Thanks
terms.
for saying that. It's true.
They get you with the Santa Claus rally. They get you with transitory Goldilocks. It basically is this concept that everything's just going to work out perfectly, that there's going to be this beautiful balance between the Fed rate hikes and growth, and that it's not going to be, they also talk about the rough landing, the hard landing of a plane. Yes, the Fed is trying to bring this economy back into order, and yes, it would be great if that were to happen smoothly, but we have not had a hard recession since the 2008 Great Recession or 2009 Great Recession. We're a decade overdue for some financial, rebalancing.
We are overdue, especially with this infusion of cash and quantitative loosening.
But Larry, that's it right there, and I think that that's where I'm trying to get to is that cash has not worked its way out of the system yet.
I agree.
And that's the reason why the smart money believes that it could go up. And so here's what I'm wondering. With this event that we occurred, we could see a reversal. This market could spend the next 2 months going down. We don't know that.
No, we don't.
The market could have hit a bottom, right? It could hit a bottom in October, and we could move sideways and go up.
But what happened before October? Everybody was swearing that June lows. Remember
That's
last
right.
June
That's
lows?
right.
Oh,
That's
that
right.
was the bottom. And then before that, I forgot what month it was. That was the bottom. Then June came. It was a lower bottom. Then October came. It was even a lower bottom.
And then big tech really bottomed at the end of December.
Yes.
Okay, because you have to remember, Tesla was down at 102, $102 January 3rd, January 4th.
Yeah, and it hit, remember, for the ones that have selective hearing, I said 4 different times that there was a psychological level of support at $100 for Tesla.
Yes.
And I said it's gonna bounce off of there and come back. I said, there was a hard, remember, 65, there was support, then 85, right? But I said, but there's a psychological support at $100. And what did it do? 101, boom, and then right back up 100%.
And we've come up so fast, so quickly, in such a short amount of time. We've knocked on the door of 200, right?
Yep.
And but so here's the bottom line, Larry.
Yeah.
I'm going to jump into the technicals really quick. Do you have any other thoughts before I do that?
No.
I just want you. Okay.
I want you to go.
So here's what I want to just tell you guys, right? So on the S&P 500, as measured by the SPY or the SPX, okay, we've blown all the way up to the high. We have not. Yes, today we did not. Yes, go ahead. Today we've not broken over yesterday's high. Okay, we're still at 41.95 is the high. This is not a pretty candle. Okay, this is not a bullish candle. It's a little bit of a gravestone doji. That doesn't mean that we're done, but it's not pretty. It's not very good. I'm just going to tell you right now that for this run to have any legitimacy from a technical analysis perspective, we have to back test. Okay, we're going to first back test 4,100. Okay, now we could back test that and bounce. I don't believe that we will. I believe we'll break right through it. Okay, pretty much we almost hit that today. Okay, now tomorrow, I think when the next trading day, I'm expecting that we're going to break down beneath that. But for a fact, we're going to have to come back and back test 4,000. Okay. Now, and the goal of this, if this is the new bull run, then we need to make a series of higher lows. Okay. We would have had this be the most recent lowest low. This would have been the higher low, which was right around that 38 to 3,900. And then we've got to back test and we got to create some consolidation here above 4,000 to be able to build and go higher. So I'm just going to tell you, let's get back on the camera. Let me just tell you, this is a straight prediction from me today. We're going to know, in my opinion, everything that we need to know about this market on this simple idea that we're going to back test on the SPY 400 and on the SPX 4,000.
When do you think that's going to happen, Josh? 'Cause
Well,
I'm hearing the voice of the people. When do you think that's going to happen?
I think that it's going to happen next week.
Wow, that early, huh?
Yeah, we're going to hit it next week. And
I got y'all good people.
And we're going to do one of two things, okay? If we consolidate there above 4,000 and then we build back above 4,100 and 4,200, then you know what, Larry?
What?
At some point, I'm going to have to come out and say, we are in the bull run.
Yes.
We're in the bull market.
Because we're going to trade the market that we're in.
Yeah, exactly. And, but here's what I'm telling you, okay? If we come back to that 4,000 and we break beneath it, here's what you're going to hear from the pundits on CNBC.
Show it to them one more time on the charts.
Okay, so here's where I'm saying that we're going to come back and back test. That is 4,000. And in my view, the market does not have permission from a technical perspective to go forward until it back tests and proves itself at 4,000. Now, after that, if we get a break beneath that, okay, and this is where I'm going to show them and then I'm going to tell them, okay?
Yeah.
If we get a break beneath that and then everyone tells you that we're going to come back and back test this 38 to 3,900 and potentially bounce from there. Let me get the camera. I don't believe that. I do not believe that. I believe that if we lose that 4,000 level next week, to me, I'm going to take that as a confirmation that the trend has broken down. Because you can't sit there thinking, well, maybe we still are, as we go down a layer, down a layer, down a layer. The higher low will be disvalidated if we come back to the same low. They'll tell you then could be a double bottom.
Right.
Okay. But I'm going to tell you right now that we've seen a big increase. We saw the month of January was a consolidation, was a choppy, sideways, upward moving month. Okay. And I said this in December. I said it at the beginning of January. I said that February is going to be the tough month. I said in the middle of February, that's when we were going to begin to see some pain.
Yep.
That's my view. That's what I've got for you guys today. I'll throw out a couple other small things. SBET. SBET is one of our little small cap runners. I sold when we got above $1 recently. I got back in when it was below 70 cents. It's doing really well. This is not financial advice for you. I use a stop loss. And so if I get into a risky stock and it doesn't go up, it just kicks me out and my money stays in my account.
Come on, man.
Okay, it stays in my account. I don't lose it. I go take that money and put it on another trade.
Yep.
Okay, I'm not telling you guys what to do. I will tell you this. I'm going to say this. My position stays the same with Verb. It is it's not a quality investment. These guys are
Is
like...
it a long-term
No,
hold
it's the wild, wild west over at Verb Technologies.
Be very clear.
Again, I've said very clearly, I like this play right now.
Should I put half of my portfolio in there, Josh?
No.
So you're saying I should just go all in and put all my money in there?
No, I'm not advising you to buy this. I'm not advising you. But I'm telling you that I actually am in. I had some before. I got a little bit more. And here's my game plan. I have a set stop loss at 17 cents. Okay, it's sitting at 19 cents. If it goes beneath 17 cents, I'm not chasing it. I'm done with it forever. Not unless it comes back up and does something interesting. So I wanted to give you guys those updates on those two small caps. But Larry, I'm going to give you the final word on this video.
Trade with the chart, not your heart. I literally, without even looking at that chart, expect the exact same thing. That's it. That's all I got to say.
Very good. Very good.
I'm being cautious. Use your stop losses. Use your stop losses, your stop losses, your stop losses. Protect your gains. So at the end of this video, If you guys want to continue this conversation, I will be posting the both of us on my page, and then I'm going to be saying the same thing to my followers to come over here. We're working together as well as individually to help to keep you guys as informed as possible for your trading journey.
Larry, I want to get into crypto on your video.
Okay.
We have a little spot for it.
Yeah, absolutely.
Okay,
Yep.
I just want to thank you always for hitting that like. Say hi in the comment section. Throw a heart in there because it takes courage to face this market, face Wall Street when it doesn't make sense, and to slay that dragon and to take away its treasure. Wall Street's not going to hand you its wealth.
And to tell you the truth and not what you want to hear.
Absolutely.
It takes courage.
Absolutely, absolutely. So yes, if you've made it this far, then I probably have earned that subscribe. Go ahead and subscribe. Hit all YouTube notifications. As always, peace and blessings.
Peace. I almost said peace and chicken grease. That's old. That's old school.
See y'all later.
Peace.
Bye-bye.